There is something Canadian seniors receiving the Guaranteed Income Supplement should be checking right now, and it is not because the government has announced a new September deadline. In fact, that distinction is extremely important. As we approach September 2026, many seniors may be looking at their bank account, their OAS and GIS payments, and wondering whether everything is still correct. But the real issue is much more basic. Does Service Canada have the right information about your income and personal situation? Because GIS is not a benefit that simply stays the same forever. Your eligibility and payment can change when your income changes. Your marital status can matter. Your spouse's income can matter. Retirement can matter. A pension ending can matter. And your annual tax return plays a major role in the review process. The federal government says GIS is reviewed every year using your federal tax return, and in July you receive a letter explaining whether your benefit has been renewed, stopped, started, or resumed, or whether more income information is needed. So if you are watching this in late August 2026, the smartest thing you can do is not panic. Instead, check your GIS status, check your income information, check whether your circumstances have changed. And if your income has fallen significantly, especially because you retired or lost another pension income source, understand that there is a specific rule that many seniors overlook. That rule could be extremely important for someone whose income this year is lower than last year's income. And later in this video, I'll explain exactly what that means, why it matters, and what you can do if your current GIS calculation does not seem to reflect your real financial situation. If you want straightforward, fact-checked updates about CPP, OAS, GIS, and Canadian retirement benefits without unnecessary confusion, subscribe to the channel and turn on notifications. Now let's get into the rule that every GIS recipient should understand. Let's start by clearing up one important point. There is not an official Government of Canada rule saying every Canadian senior must submit a special GIS form before September 2026. I want to make that very clear because you will sometimes see headlines online suggesting that seniors have a secret September deadline or that GIS payments will automatically disappear if you do not complete a new application before September. That is not what the official information says. The actual GIS system works differently. The Guaranteed Income Supplement is a monthly, tax-free benefit for eligible low-income seniors who receive OAS. Eligibility depends on factors including age, OAS eligibility, residence, income, and marital status. And one of the most important parts of the system is the annual review. According to the Government of Canada, GIS is reviewed each year using your federal tax return. The July review determines whether your GIS continues, changes, stops, starts, or resumes, or whether Service Canada needs additional income information. That means July is a particularly important month in the GIS cycle. So why are we talking about September? Because September is an excellent point in the calendar for a personal benefits check. By late August, the July annual review has already happened. You should have had an opportunity to see your updated benefit information. And if something looks wrong, you should not simply wait months and assume the government will eventually figure it out. September is also the final month of the current July to September benefit quarter. Then October begins a new quarter with another cost of living adjustment to OAS-related benefits. For October to December 2026, the Government of Canada says OAS benefits, including GIS, are scheduled to increase by 1.4% based on the applicable CPI calculation. So this is the perfect time to understand what is actually happening with your benefit. Not because there is a secret September deadline, but because you should know what your benefit is based on before you move into the next quarter. And there is another detail that is even more important. Your GIS is not based simply on how much money you receive from the government every month. Your income matters. This is where many seniors become confused. Someone might say, my neighbor receives GIS, I receive GIS, and we are both over 65. Why are our payments different? The answer can be income, marital status, and other circumstances. The Government of Canada explains that GIS is calculated using factors including your marital status and your income from the previous year. For couples, combined income is relevant. For the July to September 2026 quarter, the published maximum GIS amount for a single person receiving OAS is up to $1,123.17 per month, with an annual income threshold of less than $22,800. For someone whose spouse or common law partner receives the full OAS pension, the maximum GIS amount is up to $676.09 per month, with a combined annual income threshold of less than $30,096. Other marital situations have different thresholds, but please pay attention to the words up to. That does not mean every eligible senior below the threshold receives the maximum amount. Your actual GIS can be lower depending on your circumstances and income. This is why comparing your payment with your friend's payment can be misleading. Maybe you have different CPP income. Maybe your spouse receives a pension. Maybe your income changed. Maybe you had employment income. Maybe you sold an investment. Maybe you retired recently. Maybe your marital status changed. All of these circumstances can affect the calculation. And this brings us to one of the most important things to understand before September. The income used in the annual review can sometimes be different from what is happening in your life right now. Let me give you a simple example. Imagine a senior had employment income throughout 2025. Then, during 2026, that senior retired. Their income in 2026 may be substantially lower than their income in 2025. The regular annual review may initially rely on information from the previous year's tax return, but the Government of Canada specifically says that if you or your spouse or common law partner has a lower annual income because of retirement or because other pension benefits were reduced or stopped, you should contact Service Canada. In those circumstances, Service Canada can set the benefit using an estimate of current year income instead of last year's income. That is the rule many people do not understand, and it can be much more important than a supposed September deadline. Let's slow this down because this could be the most valuable part of today's video. Suppose your 2025 income was relatively high because you were working, then you retired in 2026. If your income has fallen substantially, the income picture that describes your life today may look very different from the income picture used in an ordinary annual assessment. The government recognizes that circumstances can change. The official GIS guidance says you should contact Service Canada when you or your spouse or common law partner has a lower annual income because of retirement or because other pension benefits have been reduced or stopped. Service Canada can, in these circumstances, estimate your income for the current year instead of relying solely on last year's income. Think about what that means. You do not necessarily have to sit quietly and say, well, my income was higher last year, so I guess I just have to accept whatever GIS I receive. If your current circumstances have changed significantly, you should ask Service Canada whether a current year income estimate applies to your situation. This is not a guarantee that your GIS will increase, and that distinction matters. Nobody should promise you that calling Service Canada will automatically result in a higher payment. It depends on your individual circumstances, income, and eligibility. But the important point is that there is a legitimate process for situations where current income is lower than the previous year's income. That is why I would encourage seniors who experienced a major income reduction in 2026 to pay particular attention. Maybe you retired, maybe your employer pension stopped, maybe another pension payment was reduced, maybe your spouse experienced a major change in income, maybe you moved from employment income to retirement income. These are not situations you should ignore, and if your income has changed, the official guidance says you should contact Service Canada. There is another major factor that can completely change the calculation, and that is your marital status. GIS is not always calculated the same way for a single senior and a senior who has a spouse or common law partner. For couples, combined income can matter. That means a change affecting your spouse can potentially affect your GIS situation as well. Imagine a couple where one person receives OAS and GIS and the other person has employment or pension income. If that second person's income changes, the household's GIS calculation can potentially change. That is why the government tells GIS recipients to contact Service Canada when certain personal circumstances change. Those circumstances include getting married, entering a common law relationship, separating or divorcing, or when a spouse or common law partner dies. Income changes should also be reported when appropriate. This is especially important because some seniors assume the government will automatically know every change immediately. Sometimes information is updated through tax filings and government records, but you should not assume that every important change will instantly appear in your GIS file. If something significant has happened, make sure you understand what you need to report. And here is another reason to check your information. Suppose you became widowed. That is not simply an emotional and family change. It can also change the income and benefit circumstances used in government benefit calculations. Similarly, if you separated from your spouse or entered a new common law relationship, your circumstances may need to be updated. These are not reasons to panic. They are reasons to keep your government records accurate, and that leads to one of the biggest mistakes seniors make. If you receive GIS, do not think of your tax return as something that only matters for income tax. Your tax filing can also be extremely important to your GIS. The Government of Canada says that each year your GIS is reviewed using your federal tax return. It also says you must file your taxes by April 30th every year to avoid disruption of GIS payments. That means if you have not filed your 2025 tax return, this is something you should address immediately. The official OAS page currently warns that if you have not filed your 2025 taxes with the CRA, your GIS payments may stop or be reduced, and advises seniors to file as soon as possible. It also says you can report income directly to Service Canada to renew or confirm eligibility. This is a much more concrete issue than a mysterious September deadline, so if you're watching this at the end of August and thinking, do I need to complete some new September GIS form? First, ask yourself something much more important. Did I file my 2025 tax return? If the answer is no, do not ignore that. And if you did file, check your GIS information and any correspondence you received from Service Canada. If you received a letter explaining your benefit was renewed, stopped, started, or resumed, read it carefully. If the government requested additional income information, do not put that letter in a drawer and forget about it. That could be exactly the kind of issue that needs your attention. Let's put the current numbers into context. For July through September 2026, the maximum OAS pension for people aged 65 to 74 is $751.97 per month. For people aged 75 and over, the maximum OAS pension is $827.17 per month. The maximum GIS for a single person receiving OAS is up to $1,123.17 per month. Again, these are maximum published amounts, not guarantees. Your actual benefit can be different, and the amounts are not frozen permanently. The government reviews OAS benefit amounts quarterly in January, April, July, and October to reflect increases in the cost of living. The July to September 2026 OAS benefit amounts increased by 1.2% compared with the previous quarter. For October to December 2026, the government says OAS benefits will increase by 1.4%. That includes the OAS program's benefits, such as GIS. So September is also useful as a checkpoint. Look at your current payment. Look at your July GIS decision or benefit information. Then compare what you expected with what you are actually receiving. If everything looks correct, excellent. If something looks different, investigate. Don't assume that a lower amount automatically means there is a mistake. And don't assume that every increase means you have suddenly become eligible for more. Understand what changed. That is how you protect yourself from both unnecessary worry and missed opportunities. There is another rule worth understanding if you are still working while receiving GIS. The Government of Canada says the GIS earnings exemption allows a person receiving GIS to earn up to $5,000 in employment or self-employment income without reducing their GIS benefit. For earnings between $5,000 and $15,000, only 50% of that income reduces the GIS benefit. This is important because some seniors hear the words low-income benefit and assume that working even a small amount automatically eliminates GIS. That is not necessarily true. The earnings exemption exists. However, you need to understand that this specific rule relates to employment or self-employment earnings. It does not mean every type of income is treated the same way. So if you're working part-time, don't simply assume you must stop working to protect GIS. And don't assume that because you earn a certain amount from work, your GIS will automatically disappear. Your situation needs to be assessed under the actual GIS rules. This is one of those areas where a little knowledge can prevent a big mistake. And if you are considering taking on additional work, it's wise to understand how that income could interact with your overall retirement income before making a decision. Let's go through some mistakes that can cause unnecessary problems. The first mistake is believing a social media headline without checking the official source. If someone tells you every Canadian senior must complete a GIS form before September 1st or lose their benefits, stop. Do not forward it to your family. Do not panic. Check the Government of Canada information first. There is no general official rule saying every GIS recipient must submit a special form before September 1st, 2026. The actual annual review occurs through the established GIS process, including the use of your tax return. The second mistake is failing to file taxes because you do not owe tax. Some seniors think, my income is low, so why bother filing? But GIS eligibility is connected to your tax information, and the government specifically warns that failing to file can interrupt GIS payments. The third mistake is ignoring a major income change. If you retired this year and your income is now significantly lower, don't simply assume the previous year's income tells the whole story. Contact Service Canada and ask about the current year income estimate process. The fourth mistake is ignoring changes in marital status. Marriage, separation, divorce, becoming common law, or the death of a spouse can all affect your circumstances. The fifth mistake is comparing your GIS payment with somebody else's. Your neighbor's payment is not necessarily your payment. Your income may be different. Your marital status may be different. Your spouse's income may be different. Your circumstances may be completely different. The sixth mistake is assuming OAS and GIS are identical. They are connected because GIS is part of the OAS program, but they serve different purposes and are calculated differently. OAS is taxable, while GIS payments are not considered taxable income. And finally, do not wait until there is a serious payment interruption before checking your information. A few minutes of review can be much easier than trying to resolve a problem after several payments have already been affected. Now let's make this practical. If you're a Canadian senior receiving GIS, take some time before September ends to review your situation. First, confirm that you filed your 2025 federal tax return. If you haven't, deal with that as soon as possible. Second, check your most recent GIS or OAS correspondence. Look for the annual review information. Did your GIS continue? Did the amount change? Did Service Canada say it needed more information? If you received a letter, read the entire letter rather than looking only at the payment amount. Third, look at your income situation for 2026. Ask yourself whether your income is significantly higher or lower than last year. If your income is lower because you retired or because a pension was reduced or stopped, contact Service Canada and ask whether you can have your current year income estimated for GIS purposes. Fourth, check whether your marital situation has changed. If you got married, separated, divorced, entered a common law relationship, or lost a spouse, make sure you understand whether Service Canada needs updated information. Fifth, check your payment details. Make sure your bank information and address are correct. The government provides options through My Service Canada account for managing information such as your payment destination and address. Sixth, check your actual GIS payment against your expectations. Don't just look at the deposit. Understand what amount you are supposed to receive and why. If you cannot explain a significant change, investigate it. And seventh, keep your documents. Keep your tax information, Service Canada letters, and relevant income records somewhere you can find them. This can save you enormous frustration if you need to contact Service Canada later. If this information is helping you understand the system, this is also a good time to subscribe. We focus on practical Canadian senior benefit information and explain the rules in plain language so you can make better informed decisions. Now let's say you have completed your tax return. You've received your annual review, but your GIS still doesn't look right. What should you do? First, don't assume the government made an error. But don't assume everything is correct either. Gather your information, look at your income from the relevant year, look at your current income, look at your marital status, look at the GIS amount you're receiving, then contact Service Canada. The Government of Canada provides public pension support online, by phone and in person, including support for OAS and GIS questions. When you contact them, explain the situation clearly. For example, if you retired during 2026 and your income dropped substantially, say that. If your spouse's income changed, explain that. If another pension ended, explain that. The point is not to demand a particular payment. The point is to make sure Service Canada has the information needed to assess your situation correctly. And remember, if you are asked for information, provide accurate information. Do not guess, do not deliberately leave income out. Do not rely on an internet comment telling you how to report something. Government benefit calculations can be complicated, and providing incorrect information can create problems later. Accuracy protects you. So let's return to the original question. Why should a Canadian senior do something before September? The answer is not that September 1st is some secret GIS deadline. It isn't. The better reason is that September gives you an opportunity to pause and review the results of the July annual review before the next quarter begins. Your GIS has already been reassessed for the current benefit year. Your July to September benefit amounts are in effect. And October brings the next scheduled quarterly adjustment to OAS-related benefits. That makes late summer a sensible checkpoint. If you discover something that needs attention, you can start dealing with it now rather than ignoring it until winter. And if everything is correct, you have peace of mind. There is a bigger lesson here. Canadian retirement benefits are not something you should check only when a payment disappears. You should understand the system while everything is working normally. Because the seniors who know how their benefits are calculated are usually in a much better position to notice when something changes. Let's return once more to the current income issue because it is easy to miss. Imagine that in 2025, you had employment income of $35,000. Now it's 2026 and you have retired. Your income is substantially lower. A senior in this situation might look at their GIS and think, why hasn't my payment changed yet? The correct response is not to assume that you're automatically entitled to a specific increase. Instead, contact Service Canada. The official GIS guidance specifically addresses situations where you or your spouse has lower annual income due to retirement or because pension benefits were reduced or stopped. Service Canada may use an estimate of current year income instead of last year's income when determining the benefit. That is a powerful piece of information. But remember the other side of the rule. If your income goes up, that can also affect GIS. So don't think of the system as a one-way opportunity to increase payments. It is an income-tested benefit. Your eligibility can change as your circumstances change. The goal is not to maximize a payment by hiding income. The goal is to make sure your benefit reflects your actual eligibility. That's the responsible way to approach GIS. If you are 65 or older and receiving GIS, this video applies to you. But some seniors should be especially attentive. If you retired during 2026, pay attention. If your employment income dropped significantly, pay attention. If a pension ended or was reduced, pay attention. If your spouse's income changed significantly, pay attention. If your marital status changed, pay attention. If you have not filed your 2025 taxes, pay attention. If you received a letter from Service Canada asking for additional information, pay attention. And if your GIS payment changed unexpectedly, pay attention. None of these situations automatically means something is wrong. They simply mean your circumstances deserve a closer look. And if you're not receiving GIS but believe your income is low enough that you might qualify, don't assume you are automatically excluded. The government says GIS is available to eligible OAS recipients who are 65 or older and meet the applicable income and other requirements. If you believe you qualify but aren't receiving it, investigate your eligibility through the official government channels. Let's bring everything together. The first takeaway is simple. There is no general special September 1st GIS deadline for every Canadian senior. If you see a headline claiming otherwise, verify it before you panic. The second takeaway is that GIS is reviewed annually. Your federal tax return is a major part of that process, and the annual review normally produces a July notice explaining whether your benefit has been renewed, stopped, started, or resumed, or whether more information is needed. The third takeaway is that filing your taxes matters even if your income is low. The government says failing to file can interrupt GIS payments. The fourth takeaway is perhaps the most important. If your current year income is significantly lower because you retired or because pension income was reduced or stopped, contact Service Canada. There is a process that may allow your GIS to be based on an estimate of your current year income rather than simply relying on last year's income. The fifth takeaway is that marital status and household income matter. A change involving your spouse can affect your benefit calculation. The sixth takeaway is that your current GIS amount is not necessarily the same as someone else's. GIS is income tested, and published maximum amounts are not guaranteed amounts for every recipient. The seventh takeaway is that October brings another scheduled OAS adjustment. For October through December 2026, the government says OAS benefits will increase by 1.4% based on the applicable CPI adjustment. And finally, the most important takeaway is this: don't wait for a problem to force you to understand your benefits. Check them while everything is still working. If you're a Canadian senior receiving GIS, September should not be a month of panic. It should be a month of awareness. Look at your tax filing. Look at your July annual review. Look at your current income. Look at your marital status. Look at your payment. And if your circumstances change significantly, especially because you retired or lost pension income, contact Service Canada and ask whether the current year income estimate rules apply to you. You may discover that everything is exactly as it should be, and that's good. You may discover that you need to provide information. That's something you can address. Or you may discover that you are simply unaware of a rule that could be important to your situation. The biggest mistake is doing nothing, because you assume the government automatically knows everything about your life. Your retirement income can change, your family situation can change, your tax information can change, and your government benefits can change with them. So don't focus on scary headlines about secret deadlines. Focus on the real rules. File your taxes, read your Service Canada correspondence, keep your information accurate, and if your income has changed significantly, ask the right questions. That is how you protect your retirement income. And remember, the information in this video is general education. Your personal GIS entitlement depends on your individual circumstances, so always confirm your specific situation with Service Canada or the Government of Canada. If this video helped you understand a part of the GIS system that you had never heard explained clearly before, subscribe to the channel and turn on notifications. Because when you're living on a fixed retirement income, understanding your benefits isn't just useful, it can make a real difference. Stay informed, check your benefits, and never be afraid to ask questions about money that you may be entitled to receive. I'll see you in the next update.